Good morning from our global headquarters in New York. I'm Manus Cranny alongside Danny Berger. Welcome to Bloomberg Brief. Let's set that agenda.
Disastrous debate. Round one of Biden versus Trump sets off alarm bells just over 4 months ahead of the election. Counting down to PCE, will it be the slowest of 2024? Emboldening the rate cut debate. Losing momentum, Nike falls short and concedes ground to one of its major rivals, Adidas. Good morning, Manus.
A very good morning, Danny. It's almost as if there's nothing else to talk about apart from that debate and how bad it was for Biden and for Trump. Equity markets, we're counting down to the PCE. You've got the Atlanta Fed, GDP now softening a little bit, 2.7%. Nike is the stock that you want to watch. Get your running shoes on, whether the Adidas, Puma, or whatever. But at the moment, it looks like Nike's not top of your brand selection. We've had the auctions this week. We're on the bond. Watch out for the PCE today. The city economic surprises, the lowest since 2022. Bostic says there are glimmers of evidence that the price changes are moving our way. And the dollar index had been bid on the back of the Trump narrative around tariffs. But wow, what a debate, Danny. Good morning.
Good morning, Manus. Yeah, I mean, what a debate. And we can talk about as much as we want how difficult it was for President Biden, how he positions after this. But you come away no more certain about 2025. If you're an investor who is hoping to watch this debate for any policy, you got none of that. Instead, what you come away with is anything more uncertainty as the choir about should Biden be replaced starts to heat up.
Yeah, and that is a very, very real and live debate. You're looking at Democrats in full panic mode, regardless of what Trump did during this debate in terms of the narrative. The point about it was you come away, you had to roll out Kamala Harris on CNN, who said, yeah, it was a slow start. And that is probably the understatement.
Well, I mean, it's arguably been years of back and forth. And we finally have had President Biden and former President Trump facing off in person in the election's first presidential debate.
There's more to be done. There's more to be done. Working class people are still in trouble.
He has not done a good job. He's done a poor job, and inflation's killing our country. It is absolutely killing us.
The price of eggs, the price of gas, the price of housing, the price of a whole range of things. That's why I'm working so hard to make sure I deal with those problems. I was recently in France for D-Day, and I spoke all about those heroes that died. I went to the World War II cemetery, World War I cemetery he refused to go to. He was standing with his 4-star general, and he told me, he said, I don't want to go in there because they're a bunch of losers and suckers. My son was not a loser, was not a sucker. You're the sucker. You're the loser.
There's nobody that's taken better care of our soldiers than I have. The money that we're spending on this war, and we shouldn't be spending, it should have never happened. I will have that war settled between Putin and Zelensky as president-elect before I take office on January 20th. I'll have that war settled.
Let's get straight to Tyler Kendall. She joins us now from on the ground in Atlanta. You've had no sleep and a lot of time to really absorb the takeaways here, Tyler. Good morning to you. I mean, there's a clarion call here for replacement of Biden. Just how bad was it for him, or was there another side to this analysis?
Yeah, hey Manus, as you're alluding to, while there will be some talk about policy today, we're really expecting the emphasis to be on the presentation. All the headlines you're going to see have been really about the missteps that President Biden took, whether that was stumbling over words or meandering through answers. And also he had a noticeably more raspy voice. Now, a source familiar tells Bloomberg News that the president was fighting through a cold, but as you know, he's been dealing with these questions about his age and whether or not that could impact his reelection. Of course, he's at 81. He is currently the oldest serving U.S. president in U.S. history. I want you to take a listen here to this one moment that's been gaining traction. I spoke to a Democratic strategist right after the debate that told me that this was the moment that really seemed to set the tone moving forward.
Making sure that we continue to strengthen our healthcare system, making sure that we're able to make every single solitary person eligible for what I've been able to do with the with the COVID, with dealing with everything we have to do with, look, if we finally beat Medicare.
So you heard there a meandering answer and then a pause that was really the beginning of the debate in terms of a question that had to deal with our national debt, and then it ended up leading into health care. But of course, to be fair, President Trump wasn't without his exaggerations and also citing some falsehoods. Bloomberg News was fact-checking on the terminal and online all night, but it really seems that President Biden's missteps have been the focus here and moving forward.
So what now, Tyler, especially when you have not just Democrats in quiet talking about their concern, but out loud? How does the Biden campaign respond to this, and the Trump campaign for its part too?
Right. Well, President Biden actually had already came out right after the debate. He had a stop at a Waffle House here in Atlanta where he told reporters that he felt like he did a good job. Manis alluded to earlier, Vice President Kamala Harris came out and admitted that it was a slow start, but she said that they ended up finishing strong. But something interesting that struck me being in the spin room was how much Republican colleagues came out for former President Trump. They came out early and often for him, whereas it took us a lot longer to see the Democratic circuits come out.
Okay, Tyler, thank you so much. We know you've been up late. Hopefully this means you can finally get some sleep. Bloomberg's Tyler Kendall from Atlanta. Joining us now is Alfonso Peccatiello, CEO of the Macro Compass. Alfonso, good morning to you. Did last night change anything for you when you think about 2025 and how you want to position?
Well, I should say the debate was not much of a debate. Unfortunately, we learned not a lot when it comes to policy, but we learned that the Democrats most likely have to probably replace Biden last minute in the race. And that's quite something, because right now, if they don't, it seems like the polls are going to switch pretty aggressively towards Trump. And if they don't, they are probably bound to lose the elections, and that has a lot of potential impacts. I think we got to watch the bond market very closely, particularly the shape of the yield curve. Trump is coming out with a policy mix that is a big risk premium potential steepener for the yield curve. It comes with a mix of pressuring the Fed to basically be more dovish, cut interest rates, but at the same time imposing tariffs. And so the combination of the two has to steepen the curve, has to bring back this risk premium in bond markets, and has to bring back volatility as well in macro.
Well, that term premium is really sort of becoming more anemic. I think Terry Haynes summed it up nicely. It was largely a fact-free zone that wasn't policed in real time. You talk about the possibility of a Trump regime. That regime, according to Adam Posen, would be massive deportation of immigrants. Larry Summers says it would be the mother of all stagflation. Now, that would lead to rate hikes, not cuts.
Yeah, so that's exactly what the bond market is going to do, right, Manis? Because if you try and pressure the Fed not to respond appropriately to this type of stagflationary policies, what the Fed is going to do in that case is just try to hold rates, right? But then what happens is the bond market is going to go further down the curve and pressure for these hikes to come and put back this inflation risk premium into the market, would put back this volatility back in the long end of bond markets. And we know that bond markets are like the base of the pyramid of financial markets. If you try to shake them, right, and you bring too much vol into it, the reverberations on other assets, starting from credit all the way up to equities, are very evident, as we saw, for example, in 2022.
Here's the problem, Alfonso, is you can have a clear view of what that would mean, but it can be a hard thing to trade, especially now when we don't know what the outcome is. And as you say, we don't necessarily know who the two candidates will be at this point after last night. So you can have this view, Alfonso, but how much conviction can you have to trade it even next year when we have the president, considering you see Team Trump, pushing back after some of these reports come out of things like the independents and the Fed. So how much conviction can you really have?
So the beautiful thing about this then is that in macro, you don't have to necessarily trade directional, but you can also trade volatility itself, right? So one thing is to say, when is the curve going to steepen? When is the term premium going to be back? The other thing is to say, I have a relative certainty that vol in bond markets is going to increase. And if you have that view, that's what you can try to do is structure trades that benefit from that increase in volatility, right? And that is one way to express the idea.
Well, you say the pool party in U.S. equity markets is very crowded. Well, we know how crowded it is. We know who makes the biggest splash there. What did you learn after 3 days and a 13% drop in NVIDIA? Is it a warning shot to perhaps buy volatility? Because, this is a splendid example of moments of existential angst in one stock.
Amongst the many models we run at the Macro Compass, we have a thing called the pool theory. So, Manus, if you think of a pool party, right, what happens is that you have the early joiners, they come in and the pool is almost empty. They have fun. And then the rumor gets out, right? And then more people join the party. All of a sudden, the pool becomes crowded and there is no space anymore. And the music is getting down and, the party is about to end. And the pool right now is pretty crowded, looking at a couple of indicators. I mean, realized volatility in the S&P 500 is below 10%. That's pretty low. And on top of that, out-of-the-money puts are, sold away for very little premium. And when the combination of these two things happens for a sustained period of time, it's generally a signal that the pool is pretty crowded. Where you can see it as well is carry trades. Stuff like the Mexican peso, the Brazilian real have unwound very aggressively. Why? Well, the carry pool was very full as well. And I guess we're getting some signals as well from the NVIDIA drawdowns that, yes, the pool is pretty crowded right now.
Okay, Alfonso, by all accounts, the hedgies have gone to the Hamptons, according to Goldman Sachs. But I can give you on good authority, the pool party at Soho House in this city, it is crowded, Alfonso. Alfonso Peccatiello of Macro Compass with the very latest. I'll leave you to that thought. There you go. Let's get you up to speed with the other stories trending on the terminal. There are other terminal stories apart from politics. L'Oreal is expecting slower growth for the overall beauty market this year. They've got weakness in China weighing on their sales. The cosmetics group told investors they see the global beauty market growing between 4.5% to 5% this year.
The judge who scrapped Elon Musk's $56 billion Tesla pay package will hold a hearing over the recent shareholder vote reviving the deal. The Delaware Chancery Court may take judicial notice of the vote, but it is not obligated to recognize the results. Tesla has argued that the vote addresses many of the concerns that the judge had raised in her decision.
Argentina's Congress approved President Javier Milei's signature pro-business reforms. This marks an inflection point for the outsider to govern with a hostile political class he continues to rail against.
Coming up, we have one political event out of the way. It's time for the next one. Investors bracing for France's first round of legislative elections on Sunday. We're going to get the view from JPMorgan Asset Management next on your Bloomberg Brief.
This is unprecedented territory in French politics.
We're already seeing that in Brussels. Is France diminishing both reputation but also influence?
Whoever will be in power will be constrained, in my view, by how the financial markets react.
We see that the electoral pledges of both far right or far left are evolving. So they do backtrack on some of their pledges, but we do still see fiscal slippage ahead. Rational people will prevail ultimately, because the closer we get to the elections, the less buzz and the more fundamental votes. And in any event, after the 8th of July, things will stabilize in a much more clearer environment.
Well, the CEO there of Euronext talking about rationality will kick in, but the markets at the moment are on edge, and this is ahead of the French legislative elections. The first round of that voting is set for Sunday this weekend. Vincent Juvyns, global market strategist at JPMorgan Asset Management, joins us now. Vincent, we'll get into the fiscal right and left in just a moment, but set the scene for us here as we go to the polls on Sunday. From your perspective, you say that we will have fiscal angst, but this is not an existential crisis in the EU sense, as we saw during the European debt crisis. Good morning.
Yes, good morning. Yeah, we've seen recently, obviously, a lot of tension on financial market, especially European one and especially French one. And yesterday we have seen it again with the French spread moving north of 80 basis points. So this tension is definitely going to continue. And as we look forward beyond the second round of these elections, no political scenario seems really good for financial market. The best scenario would have been the current coalition remaining in place, forcing spending cuts, obviously, as these were already scheduled by Bruno Le Maire, which was already announcing 20 billion cuts for next year, which market really expected, so that France could comply with the EU budget rules, so that France could address the issue raised by S&P at the end of the month, May, when they lowered the French credit rating. Mm-hmm. So all these issues obviously will remain with a new coalition, which will need to clarify its intention from a budget perspective, and that's obviously the main issue for financial market at the moment. On top, obviously, many local issues, whether or not France will remain as attractive for foreign businesses to invest in France. Let's say, previous government has been great at attracting a lot of FDI in France.
Can I jump in here? Because I want to ask about that specifically,
yeah.
because we've just come out of this period where Macron has courted a lot of business, but specifically American banks. I mean, we've seen events hosted by certain employers, who I won't get to because you may or may not work for them, but there has been this moving of trying to get banks into France. Does a new government change that? Do you actually see businesses perhaps stopping investing as much in the region, especially the international ones, as they did under Macron?
Well, you don't stop overnight investing in a country like France, and obviously politics come and go, but we need to obviously have clarity, I guess. Why a lot of international businesses, including American businesses, including the bank for which I'm working, JPMorgan, invest in France, it's obviously for the ecosystem, the stability of politics that we have had so far, and clearly the availability of well-trained workforce, and all the issues. These are not going to disappear overnight, so they stay. We're there for the long term. But obviously, the previous government managed to create these ecosystems, to convince all these international companies to settle in France. The next government will need to reassure those businesses that they can stay and stay at the same condition, obviously. That's among the risks that we face with this new coalition, which could come at the National Assembly after the second round.
And we've already heard Le Pen try to step back a little bit from complete chaos for the bond markets as we saw those spreads evolve. I'm looking at the latest flow from Bank of America. The largest outflows, European flows, had their largest outflows in 14 weeks. I just wonder to what extent do you agree? I caught up with UBS earlier in the week. They say a lot of institutional money has already pulled the ripcord. They've exited European and French equities. The spreads have blown out to 80 basis points. That trade is almost exhausted until you see the complexion of the outcome in the autumn in terms of the mandates, the fiscal programs.
So yeah, we have seen obviously this outflow in the industry. This set, we remain at JPMorgan Asset Management long European equities and some fixed income market as well. We acknowledge that obviously volatility will stay elevated beyond the second round. We will need to see what this coalition will propose in terms of budget. We will probably have to wait until the autumn because there's an official deadline when France will, next to 6 other countries in Europe, deliver their plan to adjust their budget to reply to the excessive deficit procedure. So we may probably stay in the uncertainty during that period. This set, I believe that it may get worse before it gets better, but I don't think we are heading to a new European debt crisis.
And we saw this in Italy too, with spreads starting to widen, and already it's happened in France. The bond vigilantes are out. Christian Lindner, the German finance minister, said that if the ECB steps in, it would raise some economic and constitutional questions. Do you think this is an ECB willing to step in if the spreads get much worse?
Could be. They've recently said that at the moment the spread widening wasn't disorderly. It didn't really prompt any reaction from their side. We could see further spread widening in the coming weeks. I remember back in 2012 when François Hollande came in power, the French spread was double the level it is now. So we could potentially see that type of development. But you raise a good point. This time around, the ECB has tools to address any disorderly spread widening, which we didn't have in 2012. That's a major difference in my opinion. Maybe also in the institutional framework in Europe. In 2012, you had an excessive deficit procedure. You could only do austerity. Today, you can do this fiscal consolidation, and at the same time benefit from investment from the Next Generation EU fund, for instance.
Right.
So
Vincent,
you can reduce the impact.
We're just about out of time. Thank you so much for your thoughts. Really appreciate it this morning. We'll see what this weekend brings. Vincent Juvyns of JPMorgan Asset Management.
It is Bloomberg Brief. I'm Menace Cranny alongside Danny Berger in New York. Front pages, this is what we've got for you. Guess what? Politics tops that bill. First up, Washington Post. The Democrats are panicking over President Biden's debate performance. The lawmakers, operatives, donors, and voters expressing concern.
Pretty much every paper leading with the debate, but also this on Bloomberg. The NFL needs to pay $5 billion. They've lost an antitrust trial over their Sunday ticket because they only gave it to DirecTV, and the allegation was that DirecTV could then artificially inflate prices.
And the Financial Times, soccer, Taylor Swift. Bit of an interesting mix. Different kind of fans, one could say. Rattling the inflation.
Maybe the same.
Rattling the inflation worries central bankers. Please, I just get this last sentence out. The rush to sporting events and concerts will fuel a surge in prices.
Wait, hang on. There are definitely people who go both to Euros and to Taylor Swift.
Listen, I am not having a go at any football fans, not in the slightest. I mean, rugby fans, football fans, Taylor Swift fans. I mean, royalty went to Taylor Swift the other night in London.
They did that selfie.
They did a little bit of a selfie. But the fact of the matter is, Danny and I are up for 2 tickets for Taylor Swift in London because it's $1,000 and it's going to boost inflation all the way around Europe.
It is, and the bad thing is that the worst part of inflation in Europe is services, and this is services inflation. Even Goldman Sachs wrote a note about this, essentially saying that the Euros 2024, the tourist inflow, will affect their Eurozone inflation forecast.
Well, I can tell you, the price of hotels in London is not cheap, but if you look at what's going on in Cologne or in Germany, whenever the football or the basketball comes, they've doubled the prices, and wages are up over 5%. But as I say, we are in the market to take the show on the road to London, mid-August, to Taylor.
I don't know if they'll let us do that. I like the idea. Oh, I'll definitely come.
Okay,
I'll see you there. Happy Friday from our global headquarters in New York. Danny Berger alongside Menace Cranny. Let's set your agenda.
A disastrous debate. Round 1 of Biden versus Trump sets off alarm bells just months ahead of the election. Counting down to the PCE, will the slowest of 2024 hit the tape, emboldening the rate cut debate. And losing momentum, Nike falls short, conceding ground to one of its major competitors, Adidas. Danny, good morning.
Good morning, Menace. This is one of the more remarkable things about this market this week. Nvidia fell yesterday. Even so, it was a stock market that gained. It was a NASDAQ 100 that gained. Small caps were off to the races, up 1%. For all the talk that Nvidia would be the destruction of this market when it falls, other things have come in to pick up the pace. Maybe it's just some rebalancing here at the quarter end. S&P futures up 1/3%. Your 10-year yield higher by, let's call it 2 basis points. 430 is where we stand. During the debate yesterday, the only slight market reaction we had was a bit of a stronger dollar, yields higher. But can you really look at yesterday and say, I have a clear market view? Euro versus the dollar, that's steady. 106, just under 107 is where we stand. Perhaps the more pertinent political issue now for investors to focus on is the first round of the French voting, Menace.
Absolutely, and we've just had the discussion in the first 30 minutes of the show about volatility. We'd had Alfonso Peccatiello talking about a crowded pool of the equity market, the bond market. Volatility will rise. JPMorgan suggests that the nerves are jangling a little bit more in terms of the French election. But when it comes to that US election, I mean, 24 hours ago, we sat here and we quoted CBS saying 20% of the US population wanted to watch that debate to find out some clarity around policies. And Terry Haynes says it was a fact-free debate, wasn't policed in real time. So did we learn much?
I mean, what we learned maybe solidified some concerns.
Yes.
And I mean, you even just hear it from Alfonso Peccatiello. The way he's preparing now is for a Trump portfolio. And a lot of people have said, look, you could know what the results are, not know what the market reaction is. He had a very clear view, though. Curve steepening, higher risk premium needing to be associated with bonds because of protectionist policy like tariffs.
And that risk premium hasn't been, that term premium hasn't been in those bond markets sufficiently to draw people in. So let's see. We've got more debates to go. And there's rising calls. I mean, there's like one line here from various people out there. I think it reflects it all. Biden is toast, and we are talking about potentially replacing him. So that's the narrative that's building. But let's talk about arguably one of the most potent back and forths between President Biden and the former President Trump, finally facing off in this presidential debate.
There's more to be done. There's more to be done. Working class people are still in trouble.
He has not done a good job. He's done a poor job, and inflation's killing our country. It is absolutely killing us.
The price of eggs, the price of gas, the price of housing, the price of a whole range of things. That's why I'm working so hard to make sure I deal with those problems. I was recently in France for D-Day, and I spoke all about those heroes that died. I went to the World War II cemetery, World War I cemetery he refused to go to. He was standing with his four-star general, and he told me, he said, I don't want to go in there because they're a bunch of losers and suckers. My son was not a loser, was not a sucker. You're the sucker. You're the loser.
There's nobody that's taken better care of our soldiers than I have. The money that we're spending on this war, and we shouldn't be spending, it should have never happened. I will have that war settled between Putin and Zelensky as president-elect before I take office on January 20th. I'll have that war settled.
All right, let's get into the big takeaways. Joining us now is Bloomberg's David Gura, who's on the ground in Atlanta, and Bloomberg editor Derek Wallbank for the Global Perspective in Singapore. David, okay, you were there in Atlanta. I hope you've slept. I'm not sure if you have, watching the debate. But it's clear that the response from it, Claire McCaskill was on MSNBC saying that Biden had one thing to accomplish. He failed at it. Does that mean he's not going to be the candidate? I don't know. So we have Democrats both in private and out loud starting to question this. Is this a realistic proposition that we could actually look for another candidate after last night's performance?
It would be extraordinary if that were to happen, but let's step back and look at what the expectations were surrounding Joe Biden. I mean, the bar couldn't have been lower. He didn't have to have a good debate. He had to have a decent debate. There was this swirl of attention around him, focused on his age and his capacity to have another term in the White House. He showed up, and from the get-go, it was startling how off he seemed to be. He was coughing. He was hard to listen to. He sounded hoarse. Just watching the two candidates in complement, Donald Trump was staring at the screen, engaged with what was going on. You saw President Biden kind of looking around and laughing to himself, but the level of engagement seemed so different. And so I think it's safe to say this was an incredibly bad debate for Joe Biden. And I think we're just beginning to wrestle with what the consequences of that might be. I mean, there have been whisperings among Democrats about their dissatisfaction with him as a candidate because of his age, because of how he's been performing. Those up until this point have been whispers, and you bring up Senator McCaskill's comments. I think that represents something extremely important because she's seen as kind of the old guard of the Democratic Party. The fact that she would articulate that indicates to me that this has kind of reached a new level of seriousness. And to your question, Danny, I think we don't really know procedurally how this would play out. We were talking in recent days just about how novel it is this debate happened so early in the cycle. Customarily, you have a presidential debate after the nominating conventions. That didn't happen this time around. I guess the upside for Democrats, if they wanted to pursue that path, if they wanted to go down that new route, is it does afford them more time to figure out how that might happen in actual fact. But again, this is new ground for this party, and certainly worrisome ground for this party to tread.
Well, certainly it's going to rise on the debate. From the investment community, there's a note that we have from Greg Valliere. Our tentative bottom line is that Biden will drop out within days, giving an opportunity to a young, fresh face. Whether you like Biden or not, it was a sad night last night. So, you know, who that young, fresh face could be anybody's choice. People are floating names like Gavin Newsom, etc. Let's go to the global perspective. Derek, good evening. You are in Singapore. The first take here is from the global perspective in Asia. As Asia looks on, how do they view this particular debate? There wasn't a great deal of substance in policy, but your first take from Asia.
Well, Manus, I think one of the things that I would point to here is that this is a rare chance. You know, the U.S. markets are all closed, but they're open in Asia when we have some of this big stuff. And during the debate, they were all open. There was a meme stock whose Chinese name sounds vaguely like Trump wins big that was limit up 10% in Shenzhen. And so that's sort of how a lot of people were looking at that in terms of assessing the assessing what happened there. I do think that there were some concerns in some foreign capitals that have been kind of allied with Joe Biden about their performance there. You're starting to see some comments there sort of start to trickle up. But yeah, I think the view from abroad was very similar of the performance, was very similar to the view from home. It was not a good night by all accounts for Joe Biden. I think that the Donald Trump that showed up was the Donald Trump that we've all expected to kind of show up. He sounded sort of in command, but if you sort of dive into the words, there were a lot of things that were said that that maybe didn't agree with the truth in a lot of cases. But I do think that the question here was on the president. The president had wanted to have this debate. This is something that the Democrats had sought. They wanted to have a contrast early. They got that wish, and then the narrative was really pretty well set in the first 15, 20 minutes of this action.
Well, David, I mean, to that point, this is a debate that what we're talking about right now is style. The style of how Biden and Trump spoke. We're not talking about what they said. Was there any actual policy to take away from last night?
Not a ton of it. I look at the economy in particular. One of the most interesting parts of this was how former President Trump, reframed what had happened in a variety of circumstances. January 6th, perhaps most startlingly, but with the economy as well. He talked about how Joe Biden created inflation. He talked about how good the economy was that he handed to Joe Biden. So he placed a lot of good faith in the fact that the tax cuts that he put in place are what juiced the economy that Joe Biden got. Again, that was kind of backward looking. I think going into this debate, I thought that the focus on style was going to center more on the former President Trump and less on Joe Biden. I thought that he was going to be the one who was kind of infusing this with policy points and trying to move the debate in that direction. That didn't happen, and I think that just left this vacuum there on the stage, guys, where it became possible for former President Trump to lie and spew these mistruths, and for Joe Biden to kind of fumble in response to those. There were moments here when he could have underlined those lies and misstatements. He didn't do that. I mean, abortion is a very key example of that. You had the former president saying that he was in favor of exemptions for abortion. Joe Biden didn't even take it to underlining that in his response.
Well, Derek, where does the Biden administration go to now in terms of salvaging this? Because even on foreign policy, Trump is saying Israel, he would allow them to finish the job against Hamas in Gaza, refusing to accept the election result. These are just some of the lines coming through from Politico. From the foreign policy perspective, in Israel, in Ukraine, coming up to some of the big global events that we've got over the summer, is this an opportunity for Biden to reclaim some ground ahead of the next debate?
Well, I think, look, man, there's a couple of things to watch here. One, I do think on Ukraine, that was probably the biggest foreign policy fracture point that they talked about. Trump was saying that he was going to get to a solution reasonably quickly, even suggesting that he could have some deal in hand, possibly if he wins before he takes office in January, suggesting that conflict never would have arisen had he been president. But, again, with the skepticism that Trump has had and been very, very vocal about in terms of the amount of U.S. aid that has gone to Ukraine. So I think that this debate will have been very heavily watched in Kyiv, as well as in Warsaw and in other places in Europe for that sort of difficulty. I do think, you asked about the salvage thing, and coming to this, to the very thing we started this about, does Biden continue, does he not? There is the ballot deadline in Ohio in early August. So if there's going to be any move, it has to be done very fast. It would be reasonably unprecedented. It would be very hard. If Biden's continuing, the easiest way to do that is to show forcefulness, right? To come out, have better appearances. It is a thing you could theoretically solve by going out and solving it, and it is on the president to be able to go do that.
Thank you very much, Derek. And David, thank you for rounding that off for us, our team coverage on the debate. David Gurr in Atlanta and Derek Waldbank in Singapore. Joining us now to get her first take is Cayla Seder, macro multi-asset strategist over at State Street. Good to have you with us. Look, we've done the politics of this. We've talked a little bit about the French elections, the debate in the US. From an investment perspective, do you hit a massive pause button now when you see these kind of unknown knowns coming to the fore in France, in the debate in the US, etc.?
Sorry. When we think a little bit more about what's happening in terms of policy and politics and whether or not this is a reset or not, I think the big focus is actually still on the monetary policy side of things. And that's, we can't forget about what's coming up and what we're seeing in the data here as well. And so, yes, we have the elections going on, and that does present some uncertainty. But I think at least here in the US, especially given where we've seen yields, it's still not a ton, there's still not a ton of caution out there. And so I think when it comes to allocation from here, we're still very focused on data, very focused on when the Fed's first cut is going to be. And so what that means for now is that there's still opportunity for really equities to do okay, given that's an opportunity for this concentration to continue.
Cayla, sorry, and that's exactly where I wanted to go. When you say U.S. equities to do well, are you just talking about NVIDIA, or is it the rest of the market too?
Yeah, I think because of the concentration that we've seen has kind of been a bit of a concern for some folks. We have to keep in mind, will this environment continue in such a way that it will allow that concentration to continue? And I think what we've seen in the data and what we see in a lot of our institutional data is that institutional investors aren't running away from this concentration. We still see overweight positioning in tech, and we're actually continuing to see inflows into the tech space. And so I think because of how data has evolved, that's still where we see the most upside.
Is there a differentiation, a subtle differentiation then to be taken? Goldman Sachs yesterday, the flow from them was about the aggressive nature of de-risking in tech. Hedges have aggressively, the hedge funds have aggressively been net sellers in June, the worst on record. What are you seeing that contradicts that?
I think in terms of the hedge fund community, we can look a little bit more in terms of shorting and where hedge funds are shorting the most sectors or not. And so we're seeing very little betting against tech stocks. And so, in terms of whether or not folks are nervous on the fast money side, we're not seeing a lot of willingness to bet against tech yet. If that were to change, I think that would be a key thing to look for. But at this point, we're really not seeing much of that.
Well, also one of the other remarkable things we've seen, Cayla, over the past week, when NVIDIA falls, other parts of this market have taken up the slack. It usually has been small caps, the more cyclical kind of stocks. Yesterday, NVIDIA falls, and all the headline benchmarks are still higher. Mike Wilson was with me earlier this week and called it lifeboats, that we're just clinging on to something that we can buy every time something else falters. What do you make of a nature of this market that feels like it's a zero-sum game, that we just keep going back and forth?
Yeah, I think we will get some of these short-term moves. However, I think bigger picture, longer term, or medium term throughout the rest of the summer, we have to think, is the macro environment going to change in such a way that would allow some of these small cap stocks, other parts of the market, to really outperform long term? And what we've seen is probably not. Whether that be, so take some of the macro policy, monetary policy. The cutting cycle is likely to be very shallow and relatively short. And so is that really enough to boost small cap earnings? Probably not relative to tech.
Right.
And so that's why we're really not excited about some of these short-term moves in small caps.
So, Cayla, my takeaway is still all I can buy is NVIDIA. Thank you so much for joining us this morning on this Friday. Enjoy your weekend. Cayla Seder of State Street here on Bloomberg Brief.
It's your Friday edition of Bloomberg Brief with me, Menace Cranny, and Danny Berger in New York. Well, there's one stock that we're tracking. Freudian slip. Nike, of course. We're tracking that.
Nike.
We're tracking Nike. There you go. It was all jumbled up in the back of the head. Either way, I hope my pension fund hasn't got much of it in it. Down 14.5%. The apparel giant tumbling after the company's full-year outlook. It failed to meet those expectations. Bloomberg's Dasha Afanasieva joins us now. This was pretty disappointing all the way around, leaving the door wide open for competitors. Were they losing? What is happening? They have this new CEO. I thought he was the evangelist to turn it around, but he's done an okay job. But what has happened in this set of numbers?
Hi, yeah, it's been a bit of a really grim one, because you've got, on the one hand, bad quarter, lots of misses, and on the other hand, they've got this horrible outlook for this fiscal year that sales are going to contract mid-single percentages, whereas analysts had expected sort of a 2% growth rate. I mean, you look to a brand like Converse, which is down 17% at constant currency exchange rates, and you do wonder, does there need to be a more drastic solution than talking about innovation, then tightening the pipeline of innovation and also getting products to market quicker? Is it a case of, is Converse going to come back as a brand? I just had a check, that in the UK, the Chuck Taylors are discounted from sort of £70 to £40 at the moment, which doesn't bode well in terms of their popularity. And it's also an incredibly saturated market driven by social media, where sort of everybody flocks to the next shoe. And how can Nike really compete there when it's also trying to manage its profitability and cutting SG&A, which can negatively impact marketing? So it's got a lot of balls in the air.
Yeah. I mean, Dasha, that's exactly where I wanted to go with you, because when you look at this market, I mean, it's like a new sports brand pops up every day and gets popularity. I mean, Gymshark takes off because it's all over the internet. If you walk around New York City, everyone's wearing aloe, I think it's pronounced, yoga stuff. So what now? I mean, how does Nike combat something like that? Is it just a matter of getting out there on social media and getting influencers to tout their stuff, or is it something more drastic?
I think it's that, and it's sort of having a pipeline of that when you're backing a whole bunch of products that then maybe one flares up. I think it's also the thing that you mentioned with say yoga, or the success of Lululemon, is you have these like specialist retailers like Salomon shoes, for example, originally kind of a climbing brand, and running shoes now is actually quite sort of core trendy. And you can see how sort of getting the niche tribes, the smaller groups of people on board with a sort of highly specialized, sophisticated product has actually spilled into more mass appeal. So I think that Nike has to kind of keep all of these levers going whilst also controlling costs. It's a very sort of fast, challenging thing. And I do wonder if it's a bit like with, say cosmetics giants that have a brand and then it kind of burns really fast and then runs out of steam. Maybe it's the same with some of the Nike brands, and they need to be gotten rid of. I don't know.
Okay, Dasha, thank you so much. Bloomberg's Dasha Afanasieva, thank you so much for that. I mean, it is the season for disappointing shoes. I mean, Golden Goose, they didn't get their IP off the ground.
Well, I'm just listening to Dasha there. I mean, she's available. She likes them. She can be an influencer. She can be on your Instagram account and sort of embolden your sales. I'm tortured with Cuts. Have you seen the brand Cuts?
I have no idea what that is.
Brilliant. It's like a leisure wear kind of thing. It's in the village. It's like,
are you being sponsored? What is this?
I'd like to be sponsored. We're open for sponsorship as well.
I think we're going to get talked down to. I don't think we're allowed to do that.
Want to go to Taylor Swift and sponsorship? No. Okay.
Okay. We're going to wrap up the weekend for you just up ahead. Let's get you set up for the rest of the week. We're going to get a slew of economic data, PCE, personal spending, and income and UMich sentiment. Then we're also going to have some Fed speak throughout the day, Barkin, Bowman, and Daly. Then on Sunday, Manus, we have the first round of France's legislative elections. So a week and a weekend full of politics.
It is, and certainly politics is going to continue throughout the day on Bloomberg TV. The surveillance team will pick it up. One could say, according to some of the notes, Democrats are in full panic mode. Will they go for a radical shakeup and change their candidate? That debate continues on surveillance over the next 3 hours.